Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news of another large fall in Chinese stocks. But first, new orders for durable factory goods in the US rose by the most in 10 months in January as demand picked up broadly. They were higher both month on month and year on year, reversing recent trends. And in Atlanta, a Fed official there warned that banks face challenges managing interest rate margins and risks, especially around the exposure to commercial real estate in the period while US interest rates rise. He worries that institutional memory about how to deal with rising rates has faded. These remarks are all part of a long, slow process of market preparation for US rate hikes. In China, equities dropped steeply late yesterday, down 6.4% in Shanghai and down 7.3% in Shenzhen. The drop has reversed some of the gains made since the Lunar New Year holiday this month. At the same time, there is a noticeable change of tone from senior Chinese policymakers. Until a few days ago, they made few public statements about their economic stresses, and those they did make offered just gloss and spin. But today we're hearing some real public analysis and guidance on how they will deal with it. They're realising that markets can punish them severely in a communications clampdown. But they have a lot of catching up to do to restore credibility. One option they are floating is a much higher fiscal deficit, debt funding to maintain growth. China's stumbles are having regional consequences. Singapore's economy grew just 2% in the final quarter of 2015, and data out yesterday, 2.1% for the whole year. That's its slowest growth in over 6 years. But there is a silver lining. The improvement from the third quarter was sharply positive and a metric that markets noted. In New York, the benchmark US Treasury 10-year yield has recovered about half of yesterday's fall and is now at 1.72%. Yesterday, local swap rates fell late in the day and remain at record lows except for the 1- and 2-year terms. Those short terms fell as well, however. And yields on New Zealand government 10-year bonds had a record low yesterday, dipping under 3% for the first time ever. The oil price is just marginally softer today at $31.50 a barrel in the US, while Brent is at $34 a barrel. The gold price is essentially unchanged today at $1,242 an ounce. New Zealand dollar is higher this morning, but still in that general range. It is now at 67 US cents, 92.9 Aussie cents and 60.7 Euro cents. The TWI will start today at 71.7, its highest in 3 weeks. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.